initially like, oh, it's so much harder, it's going to be more expensive. They're looking.
I'm expecting a stock market crash. I don't know when it's going to happen. I do think it will happen. Why do I think it will happen? Because the peace that has been brokered in the Middle East is not going to last. And the
whatever. Once more into the breach. Once more into the breach. I'm more excited than I look. But I'm just trying to think of what new things I can say as we wait for the attorneys and the decision makers. Attorneys never act, they just implement. Attorneys are never rapid in their workmanship. They just plod along. That's how they get paid. Business people defer to attorneys because attorneys scare them. But at some point, it comes down to a business decision. Hey, attorneys, what have you ever created in your lifetime that added value to human life? It's time for the business people to take over, and we're going to move forward. Anyway, I think it's soon. I think that time is very soon. I'm picking September 15th now. I know that's a slight move, but that's not really. I said I didn't expect anything in the first week of September. I thought it'd be the second week, which we're in. But now that it's Tuesday, I figure it'll be next Monday, next Tuesday. It could be this week, but just to keep our blood pressure down, I'm going to say next Monday, the 15th, which I've used before as a target. I might even have circled it in my calendar. Yep, I did. See? In orange, I circled it. So that's Monday. That's my target for news that'll excite you. Currently, guess what? We're at 12 million shares. 12 million shares of Railtown. 200 people, 8.5%. 12 million shares. That is good. That's bigger. That's bigger than because if you can hang on to it, and we'll follow it as it goes. I mean, right now, I see absolutely no reason to sell Railtown stock before it gets to, I don't know, $50, $60. But obviously, each person's situation is different, and I think it'll take a year to get, maybe less, maybe 9 months, maybe 18 months. But I think we're headed to $55 a share or higher, and I see no reason to sell. But we got to stay ever vigilant. We have to stay informed. But that's a huge position, 12 million shares. You couldn't buy that. If the stock were going up, and if the stock were $1, $2, $3, number one, you wouldn't have maybe enough money to buy that position, but the stock won't be available. When this stock goes up, let's say news gets released next Monday that the acquisition has been completed. That will remove the restriction on a lot of people from buying the stock. As those buyers come in, the one catch is at $1, not all buyers are allowed to buy because their internal mandate might say the company has to be worth, 100 billion, a million, or 500 million, or the company the shares have to trade at $5 or $3 or $2. It's different for each entity. But I think as this news is finally removed from the hands, the cold, dead hands of the attorneys, I think the stock shoots up to $1.25 or higher immediately. And then the question is, who sells? Well, there's only going to be two sellers. You're going to see some Borders bombs, some Benedetto beauties, some ham hypes coming in and saying, hey, that's a win for retail. You just doubled your money. You just made 3 times your money. Hey, come look at this new idea, this new shiny crapshoot. I'm not picking on any particular person or idea. It's just that's what when they see how much money you're making, they're going to go to CEOs and say, hey, we can raise money for you. Pay us 15 grand a month, give us 500,000 shares, free to trade, and we'll go pitch. And so that's one source of selling, will be you. When these guys come and tell you, hey, you got to win, you better get out, get back over to G-Bucks or one of these other nightmares. That's one source of selling. I hope over the next few days that I convince you not to sell at 150 or 2 or 3 or 4. Ironically, once the stock gets to $5.50, $6, it could double in 24 hours. Why? Because big institutions can buy. And these institutions don't care whether they pay 50 cents or $5 or $15. They're holding on for 5-year, 10-year performance. So anyway, you are some of the source for selling. So are you going to sell when it opens, when it runs up to 150? I don't think so, but that's one source. The other source of selling, it will be shorts, trying to protect their positions. So at, let's say $1.25, $1.50, as long as you don't sell, and I know some of you probably will, because there'll be another beauty that comes along where it's a big short position and we're going to do a share count and they're buying Bitcoin and they own a gold company and they have AI and they're doing biotech and they have an app and they have a subscription model and the CEO's on your side and you go, wow, it's going to go up. So there'll be some of you that get enticed to follow some new crapshoot. But the other selling will be, will the stock loan desks at the prime brokers allow the criminals, of course, to the prime broker, those are just good clients. Will they allow their clients to sell stock that they haven't located in size? Will they continue to extend credit to their best clients, best trading clients? My guess is in the low prices, they will. At $1.25, $1.50, $2, they will still be able to sell. But they don't know anything about the stock. They're just doing it to scare you, to get you shooken out. Then you'll get your capital over in all the hot money stocks so that a handful of men can make money on IR contracts. They can establish a position, pump it up with you, dump it on the way up, you keep buying, and they do it again and again and again. And one or two of you as investors, there's a woman out on the West Coast, I believe, used to be a client of Ham's, but he gave her to somebody else. As soon as Ham recommends something, she buys it. She's one of his first calls. But by the time he makes 200, 300, 400 calls over the next days, the stock is up. And he's saying it's going to go to 150 or whatever he's saying. And he's giving his back, he's giving his caveats. But she just sells. She buys it at $2. It goes to 8. Everyone thinks it's going to go to 100. She's out at 6 or 7. And she does it over and over and over again. That's how to play those hot stories. But that's all they are. They're just blow up the balloon and pop it. Blow it up again and pop it. Blow it up again and pop it. So if you get distracted by those, there could be some selling. But I think we don't own enough shares. We only own 12 million shares. It's not enough to stop the upward movement of this stock. It's just not. There are enough buyers out there that I've heard of who are ready to come in and add to their position for the long term that I don't think we can do anything to stop the inevitable, inexorable rise in Railtown's share price. Then it comes to the shorts. Will the banksters give their criminal clients a chance to sell stock that doesn't exist? I think for a while they will. So I think it's going to be a stutter step on the way up. I think that once the attorneys finally let go of their glorious work product, and it gets announced, I think the stock opens over $1. Opens, that's probably the wrong word. Well, I mean, if they give the news in the morning, it'll open. But if it's during the day, I just think it'll trade quickly to $1.25, $1.50. But then we'll start seeing these pressures. The bright, shiny objects will come in, so a handful of men can look after their families. But remember, you have families too. You don't have to listen to that anymore. Your escape out of this hell is to just hold on to Railtown. Wait for the 10x, wait for the 20x, and maybe a whole heck of a lot more. But anyway, the other source of selling will be that the criminals continue to try to pressure it down, drive it down quickly, spoof, collude, lie, commit fraud, commit securities fraud. But remember, Ann Wagner doesn't care about that. Adina Friedman doesn't care about that. Robert Cook doesn't care about that. Chuck E. Cheese Cromwell doesn't care about it. The SEC doesn't care about it. As long as the stocks are under $5, they couldn't give it, and that the evidence for that is by their actions over the last years. So as long as you keep listening to the shiny new objects, and as long as the stock loan departments keep allowing fake shares to be sold, it'll be a stutter step upwards. But once Railtown gets to $5, there isn't a pension fund. Well, Some might have $10, they might have $10 minimums. But in the broadest sense, almost all pension funds, mutual funds, ETFs, managed money accounts can buy the stock once it hits $5. And it'll go to 10 or 15 in a heartbeat. And at that point, if you guys have sold, you're going to be saying, oh, shoot, why did I listen to the new beauty, the new bomb, the new hype? And you might try to come back in to buy. But you know what you're going to find out? Even though the platinum blonde who named herself brilliantly, she said, wait, I don't understand. If I sell stock, why wouldn't I be able to buy it back? Well, right now, endless amounts of shares are being made available to you to buy because the so-called market makers and the prime brokers and the stock loan desks, as these criminal clients who are their best clients, just sell stock they haven't located, they lie about, they don't deliver, they don't own. They can sell it in hundreds of thousands of blocks a day. The last number I heard from Tom Ronk of established initial sales, 52 million shares sold short for Railtown. You only have 100 million, about 103 million outstanding. Remember, I'm not trying to make this a short squeeze story, but the fact is there is a large short position. I caution, I have for months, that a lot of it could just be arbitrage. The high frequency computers picking up 0.0005 of a penny across 100 million shares, balancing the dollar, the loonie, the Canadian stock price, the US stock price, and they may be in there. That may be some of it, but there is a large short position. We just don't know the exact amount. But according to initial established totals, it's 52 million shares. Well, imagine a world over the last many months where 52 million shares were not available for sale. Well, you couldn't establish your position. So Platinum Blonde doesn't know what she's talking about, of course. You'll be able to buy stock at higher prices, but will the volume be there? I doubt it. I doubt it. So the great blessing of this long wait is we've been able to accumulate 12 million shares, probably more than that, which I don't think you would have been able to do other than this criminal action and the delay by the attorneys. But I think it's swiftly going to come to an end, very swiftly. I think Monday or Tuesday next week. And that's it. $1.25 on its way to $5, on its way to $10. And these other guys are going to come at you and say, you got to win. Hey, I came in, I told you about it. Hey, listen to this. Blah, 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 blah. And they'll have some new stock where whales own all of the float and we're going to do this and that. And it's all manipulated. You don't have to do that. Take your position. Let's just take 40,000 shares as an example. 40,000 shares of Railtown right now. Oh, I got to sign back in, darn it. Okay, so 40,000 shares of Railtown right now. So fingers up, by the way, today. It's up to $1.80. So we'll have to go look at why that's happening. They've got Railtown down, of course, because why wouldn't they? The attorneys have work to do. So Railtown's bid is 42 cents, very predictable. Last trade 43.5. So right now that's equal to, I'll use 43.5 instead of the bid. 40,000. It's worth $17,400. And let's look at the ask. If you were to buy 40,000 right now, it would cost you, the ask is 44.54. So it would cost you $17.8. So if we take 40,000 shares of Railtown, it's approximately $17,500 right now. You could buy 40,000 shares for less than 20 grand. What would that be worth, let's say, next week at $1.25? You've probably already done it in your head because you're a genius. Next week, that could be worth 50 grand. What could it be worth by Halloween or sooner? By Halloween, it could be worth a big number. And what could it be worth by Easter, May 5th, right? You know, April, just after Easter. Maybe longer than that. Maybe next summer. What could it be worth? I'm going to say May, October, and I'm going to say September. And now. So if you bought 40,000 shares right now, it would cost you $17,500 of Railtown. In September, soon, I think next week, once the news is announced, if the stock goes to $1.25, that's 50 grand. In October or sooner, my target is 550. That's $220,000. And by May next year, and that, you know, it could be August next year, it could be October next year. I'm just being dramatic. If it goes to $55, you've got $2,200,000 in Railtown. So my encouragement to you, these are of course projections. Anything can happen. But my recommendation is don't listen to the next beauty that comes along. Don't be hot money anymore. And right now, don't be afraid of what you know what they do. They just sell stock that doesn't exist. And of course they're going to do it while the attorneys are causing news to be away. The rats will play. And you're going to say, well, the volume keeps changing, by the way. This morning it was over 200,000. Now it says 76,000. I don't know which is correct. 95 shares just traded at 43.5. 95 shares. So the whole complex gets priced on $50 a stock. When the buyers start coming in for millions of shares, it's not going to be available. So if you own 40,000 shares right now and you feel nervous, my suggestion is you focus on $55 or $2 million worth of stock next year sometime. I say in the second quarter, but maybe it'll be in the fourth quarter. All things being equal. Of course, we've got to navigate a potential stock market correction at some point. But anyway, that's my opening thoughts. Let's see what's going on here. Hi, Pat. I don't know what. Hey, Jim. Hey, Jim. Hey, Jack Hamilton. Thanks for stopping by. Hey, Marty Party. Hey, Fast Eddie. Chestnut. I'm the only person who can find new information on the same thing. I know I've been talking about the same thing, darn it, for, well, June, July, August, and now September, 3.5 months. You're right about that. But it'll change and make it industry. I haven't sold a single share. But it is hard. I know it's hard waiting, but that's why I'm starting to show you my degree of confidence in, of course, I can't find a green. Oh, is that one? No, black. Well, I'll use black. I know I have a green one here somewhere. But my degree of confidence of 550 is 95%, if you can read that. You know, it's probably 99%. My degree of confidence of $55, I'd put it 85 to 90%, as long as you wait. But my degree of confidence that it happens in May, that's probably a flip of a coin versus happening a year from now, you know. But it could happen by the end of this year too. And maybe we can go over some of the revenue and multiples. But if you assume certain revenue targets and multiple targets, this number is low. This number is low. So I think it's going to be exciting soon, but I know the waiting is the hardest part. I know that. And the reason I'm trying to, number one, I'm saying Monday or Tuesday of next week, but there's no reason it couldn't happen sooner. But I just don't want you all day, every day. It's going to be today. It's going to be today. And then on the other hand, I say you should be buying all you can right now because it could stop any day. You know, it is on the one hand, I'm saying hurry up. On the other hand, I'm trying to tell you don't get too excited. It might take longer. So that's a push-pull message, but that's just where we are. That's just how it is. I found my green. I see my green pen. I think it'll be soon, though. I think it'll be soon. I think your wait will come to an end. And if at the end of that wait, if you haven't fully invested what you want to invest, you're going to go, darn it, why didn't I do it? Because right now you can buy all the stock you want to under 50 cents. You want to buy 100,000 shares, you can buy it. You want to buy 500,000, you can buy it. My opinion, when this news finally gets released from the possessive hands of the attorneys, you won't be able to buy the volume of stock, but you certainly won't be able to buy it at 50 cents anymore. So now's the time to act. Now's the time that you feel in your stomach that, oh, you know, that guy might be right. It's probably going down. The shorts know something. Now the volume shows 337,000. Just a minute ago, it showed 75,000. It's all manipulation. All right, well, taking that 337,000, just take 100,000 of it. If the shorts were able to sell, the day trading shorts, or the swing traders, as they call themselves, if they were able to get 46 cents on 100,000 shares, or something close to that, and they were able to buy it back at 42 cents, that's 4 cents. Let's call it 3 cents. 3 cents a share on 100,000 shares. If they sold 100,000 shares that they don't own, they invented out of thin air, and the prime broker doesn't care, and Wagner doesn't care, Chuck E. Cheese Cromwell doesn't care. They sell 100,000 shares, breaking securities laws at 46, and buy it back at 42. That's 4 cents. Let's call it 3 cents on 100,000 shares. And today's volume is 337,000 shares. They make $3,000. If they did it on 300,000 shares, they make $9,000. That's all they care about. That's the trading shares. The positioned, the trapped shorts are thinking about other things, moving the shares to a different LLC and all that. But that's what's going on, and you mistake it as if they know something. They don't know anything. They know you're retail. They know you've invested basically all you can. They know you're scared. They know you're susceptible to any story you hear from these blowhards. So you're going to move your money. And they know that you're going to sell at some point, running out of time. Hey, it's September. I've got to buy some equipment, whatever the reason is. And they know if they can hit it hard, hit it again, they might trigger some stop loss levels. And for them to make $3,000 a day, $6,000 a day, it's better than digging ditches or waiting tables. That's what's going on. But in your gut, you're saying, oh my God, there's something wrong. There's something wrong. There's something wrong with the news. They don't know anything. They're just playing psychology. And the system and Wall Street gives them a massive sledgehammer to do it with, which is go ahead and break securities laws. As long as you give the money to Goldman Sachs and to Citadel and to all these little firms, and then the law, all the legal work gets concentrated in 2 or 3 firms, we have no problem. It's all about sluicing cash to a handful of guys. Anyway, the way out is to own Railtown. That's the way out. Do it for Don Fizz. You know, do it for all the people that lost their homes and lost money, are in pain, lost their lives, lost their daughters, lost their sons. Do it for them. And then when we have, imagine if 12 million shares, 12 million with an M, goes to $50. We can help people. We can send money to Busy Brains and Junk Savvy and to Curtis and to Patrick and to Anna and to other, 100% to continue the fight. But we'll be operating from a position of financial independence at that point, rather than one of victimhood, waiting on the latest crapshoot to come out of Shinola, which we're desperate to believe because our situation is desperate. Railtown will get you out of the red, and I think will give you green to the point that all this pain, all this suffering, all this learning of the last 3 years or longer is worth it. And then once you're financially stable, you can help fight the shorts from strength. And I'll tell you what, if we have 12 million shares or anything like it, and it goes to $100, and we set up an association to fight the shorts, I bet we can finance one hell of a lobbying effort. This is our way out in this fight. This is the way out, Railtown. We'll try to go through some revenue projections. Maybe that's what we should do today. Hey, Clay, I'm still here, still holding. Bravo, bravo. Louis Shotland. I would feel okay even if Railtown happens within the next month. Then I'll nominate William for Man of the Year. Yeah, I'm sure. I'm sure you might get one other vote. You're going to get a lot of thumbs down. But that's all right. It's not me. It's you guys. I'll nominate 201 of you for the Men and the Women of the Year, for the Investor Group of the Year, for the most courageous collection of capital committers of the year. You easily could have benefited without including us. Well, that's actually an interesting point, because I own what I own. I don't have any ability to add to my position. I have not been paid by the company, and I don't expect to either. But if you want to be negative and assume that I'm doing something bad, I think my average price I paid is 35.5, 0.355, something like that. So I'm up. But that's not why I've been talking to you, Louis. It is because, and it's, that was a lot of the reason I talked to people with the other things I said in other situations. So that gives you hesitancy as well. It's like, oh, do I want to go through that again? But this is different. This is different. And yes, that's exactly right, Louis. I want you to benefit as well. I know my audience is smaller. I know I pissed people off by supporting Palestine and somehow that made me anti-Semitic. I know I pissed people off by questioning the great feminist experiment over the last 60 years. It's more the last 10 or 15 years that are, the experiment has got consequences. It's not without, it changes things. Hey, life changes. Maybe I lost people over that. Maybe my singing voice, or maybe the fact that Ham doesn't come on here anymore, or I spoke ill of the stock price action in finger motion or G-Bucks or other stocks, including apparently one that has doubled. So in the last 6 to 8 weeks, I'm wrong on that. But I was talking collectively. Let me see. I just forgot the name for a minute. Oh, no, that's not it. Energy Vault. Yeah, it's down 17.5. It's 175. But guys, you got to remember with all these stocks, take your lessons from GME. GME went to whatever it went to. I can't even remember. Was it $500, $400, $300? It went up. Everyone's excited, and it crashed back down into the 20 range, 25 range. And then they get Roaring Kitty to come act like a mime, and you thought he was a genius, and not you personally, but the general investing public. And the stock ran to 85. And of course, I was pretty loud about saying, sell the stock, get the hell out. But they ran it with a bunch of hype, and it came right back down to, let me just use 25 as the number. Might have been lower. And then they did the trick again with Roaring Kitty. He comes on, he's got a broken arm. And it goes up to, I think, 42 or 38. And then it comes back down to 25. And then the hypesters get, hey, the chart looks good. It's really going to happen. And it runs up to 32 and comes back to 25. And then they do it again. It runs up to, 33, 35. And then it comes right back down. This is how they make their money. And it happens over and over and over again. And while the story is hot and the pumping is going on and everyone's doing it, we all think the same way. I can't do it. We're all cattle. The big bull starts running that way, we're all going to run that way. And we get going, we join in, it feels good. And then that bull goes right over a cliff. And some of us go over the cliff with them, and the others have time to notice that a section of the herd is veering away. And maybe some of us have a chance to veer away before we meet the cataclysm ahead. But it just happens over and over again. And in the middle of it, we go, wow, oh, we're missing out. William's wrong. And then it comes back and go, well, and you know, the fact is one of these is going to work, but which one? I don't know how many you've participated in, but for me, it's at least a couple of dozen. And collectively, it's not pretty. Railtown is the one way out of all this. And then you just stop listening to all that hot money. Hey, psst, psst, I've got something for you. Don't tell anybody. Look at this thing. It's got a short position. It's got a bunch of whales. The CEO's on your side. It's got AI. It's got AI. And revenues. They got revenues that are going to be coming, and there's a big, massive short position they're going to have to buy in, and it's going to go to 150. They've got to cover it. I don't know. You don't have to listen to after this Railtown, which could take you 18 months. Could take you 2 years. And by the way, as the stock goes up, I'm going to talk to you about how to hedge it, how to maybe make some income, and maybe it's time to diversify a little bit into silver, but that's down the road. Right now, the key thing you got to do is own Railtown. Anyway, let's see where it is. I'm sure they have it down. Yeah, it's down a penny. 43.5, 200 shares. So what is that? $40 worth of stock? No, I'm wrong. $80 worth of stock. $80 worth of stock. 86 bucks worth of stock, prices the whole thing downward, and we're all nervous. Oh my gosh, they know something. They know something. They don't know anything. They're just playing the same game over and over and over again. And we're going to escape it. We're going to escape it. Hey, I'm Almost Legend. Blessed Tuesday to you. A question I didn't get to ask. If someone bought Railtown at 60 cents, would it be a bad idea to sell and repurchase at the current lows? I think so. I think if you paid 60 cents, you should just count your blessings that you bought it and bought as much as you could. Yes, with retrospect, with the 100% knowledge of looking in the rearview mirror, you could have waited till it got to 43 cents to buy it, and you'd own a lot more. But a couple things you don't know. If you waited and you saw it go to 60 cents, and now it's 43 cents, you might not buy as much. You might say, I've changed my mind. I want to go do Energy Vault or G-Bucks or I don't know what else is down here. Next Trip or something. So you might not have as big a position. So what I would suggest actually is just being thankful you have the position you have, because there will come a time where 60 cents looks cheap. Look, when I first, June 4th, when I sold everything that I could sell and bought Railtown on the opening, I paid more than anybody paid for the next 2 weeks, by quite a bit. If I had waited, I think I could have paid 10 cents less, which is a huge, at that price, I could have bought a third again as many shares. But that's asking myself to be perfect. And now I feel all right because the stock is 43 instead of my average of 35 or 36. If you round it up, 36. Well, I can tell you my average, I think. I think I'd look at it right now. In my IRA, it's 34.26. And in my ever puny, it's 34.95. So I guess to be safe, you can call it 35 cents is what my average is. So when the stock got down to 25 cents, I was feeling pretty. But now that the stock's 45 cents, call it, I feel better. If I want to depress myself, I could sit down and calculate how many shares more I could have purchased had I just waited. But that's just not realistic. You're never going to get the bottom price or the high price. So I'm just glad I have what I have. And I think 35 cents is going to look cheap very soon, probably next week. And I think 60 cents will look really cheap next week as well. So I think you shouldn't sell. If you do sell, I don't think you're going to be able to get back in. The fact that I'm saying next Monday or Tuesday, I could be wrong. It could be the following Monday or Tuesday. But you know what? It could be tomorrow. And that's been a situation we've been in for a while. I know I tend to blame it on the attorneys, but it could also be that the business just keeps getting better and the documents keep getting bigger and the requirements for filing keep getting larger, and maybe that was predictable, but maybe it wasn't. Looking backwards, yeah, I shouldn't have been so urgent about June or July. On the other hand, some people have doubled. Well, one guy anyway has doubled his money even at these prices. Even at these prices. So it was good that I started talking about it early. But no, I think it is a bad idea to sell now. If you did sell at 60 cents or 55 cents, I would buy it back right now. I would hurry. I'd do it before the close of business today. Could I be wrong and be early? Yeah, I've been wrong and early for a while now. But when the window closes, when the opportunity to pay under $1.25 is gone, you're not going to think about whether you did it too soon or you could have waited a bit. You're going to think, darn it, why didn't I act? So your question's a little bit confusing because you can't sell it at 60 cents now and buy it back at 44 cents. All you could sell it for now is 43.5 and buy it for 43.7. So doing that today doesn't make sense. But if I read your question that you sold it at 60 cents or 55 cents, should you buy it back now? Absolutely. Absolutely. I would have told you not to sell, but the fact that you did, take advantage of it. Buy it all, put it all back to work right down here. Absolutely. I don't see the stock going lower, but anything's possible. Today is what, Tuesday? So we have Wednesday, Thursday, Friday this week. And then Monday, Tuesday. So I'd say within 5 days, the news is going to be announced. And just for the heck of it, I'll say there's a 45% chance it will be announced tomorrow. On Thursday, there's a 55% chance it'll be announced. On Friday, there's a 65% chance it'll be announced. On Monday, 75% chance it'll be announced. On Tuesday, 85% chance it'll be announced. And on Wednesday, a 95% chance it'll be announced. I would buy it all back right now. I know the price can change at any time. Yeah, one reason to sell stocks when they're down is if you wait 31 days, you can buy it back and you can establish a tax loss. But you're not going to have enough time, in my judgment here. Fact is, if you had done that, if you had sold toward the end of July, you may have been able to take some losses and be buying back here. But I personally would have been uncomfortable doing that because, well, number one, my majority position is in my IRAs, so it doesn't matter. But more importantly, I'm telling you, just because the attorneys have taken this long doesn't mean they're going to take any longer. And if I had to guess, they're, with the pressure I've been putting on them, I bet they've already finished it. No, I don't think they watch anything I say. But there is a business case to wrap this merger up. There's a lot of Canadian government funding. There's a lot of reallocation of capital happening in the pension plans and in the money management accounts that are going to happen in the third quarter. And you got to be ready to receive that money. People are going to make their decisions by October, maybe November, but mostly by October. And then they're going to go traveling the world for their, their New Year holidays, whether they're Jewish or Christian or Muslim or atheist. They're going to, if they're wealthy and they've done their work, they're going to start their vacations in November. There's a real business reason to get this deal finished so the company can be available for purchase. So no, I wouldn't, I think it's an enormous risk now. You saw it the other day when that gentleman said he sold stock. I think it's terribly risky to sell Railtown right now and be out of it. I think it's a bad idea to sell Railtown and just a little bit of Railtown and buy one or two of these other stocks that are being hyped, because there's nothing out there, in my judgment, unless you go to the casino and win, that can give you 10 or 15x on your money. And it could happen next week. It could happen Friday. I think it's more likely to take, the news will come out over the next 5 days, maybe the 15th, let's say. And I think the stock will go to $1.25. There might be some people shaken out. It'll be a tragedy, but as the buying comes in, I think it'll get to the higher levels that I've said. But once it hits $5.50, I think the stock goes into the teens, never comes back, and the stock which is purchased will be bought by pension funds and big pools of money, and it'll never come to the market again, except at much higher prices and many years from now. So I think it's really pound foolish to get out of the stock right now. You won't be able to buy like you can. You've gotten spoiled. You can buy 40,000 shares just for writing a ticket right now. I think that'll change soon, and for the rest of Railtown's existence. So no, I wouldn't make any of those trade-offs. I really wouldn't. I have my own intuition that you're going to be wrong in your answer, but rather hear it. Thank you, as always. Yeah, my intuition. Well, I won't talk about that, but I had a pretty good intuition when I was in California of a major event and the timing of it. And I was correct about that. Will my intuition about Monday, September 15th be right? Correct? Maybe Tuesday the 16th be correct? Or sooner. I don't know. I'm so worn out. I'm making, I feel like I've burned all the synapses on my intuition here, but just from a business person standpoint, Railtown cannot afford to be in a quiet period beyond the beginning of next week. Monies are flowing, capital is moving, funds are buying shares, ETFs are being created, retirement accounts are building their positions. They have to come out of their quiet period. It becomes reckless if they don't. Reckless is probably the wrong word. It becomes stubborn if they don't, and it'll become costly if they don't. So I don't know if it's so much of as an institution as a making an argument, but I think within the next week, by Tuesday the 16th or sooner, and I'll pick Monday the 15th, the news is going to be out. It has to be. It's just bad decision making by the board if they don't get something out by early next week. It's just really, you don't want to hide behind your attorney's skirt. Sometimes you got to get up and get out on the field to play. Attorneys don't go into the field to play. They just have conferences over on the sideline. And then they check with the referee who's sitting up in the stands. Business people get out on the field and they play. And it's time for Railtown to play. William Wallace, all right. I've been adding, good for you. All right, hold. Good for you, good job, William. That's great news. Hey, Steve. Here's David. Man, the fight you and Ham must have had is like Trump and Elon. So sad. Sorry it ended that way. I never had a fight with Ham. Never had a fight with him. I try very hard not to say anything negative about him. But that's, look, for me to point out to you and this audience that I thought it was a good time to sell Finger when it got to 550, 450, to sell calls. When I suggested, when I was very cautious on Finger until January, and I said, I think at $1.10, $1.04, some low number, I said, man, there might be a trade here where you can do 2, 3, 4, maybe 5 times your money. But that was in contradiction to the overall message. That's not having a fight. That's just a different opinion. When I pointed out that I thought Finger Motion would raise money, and what came back is they already did. They exercised the warrants. They don't need to raise money. The only people saying that are the shorts. Well, it's just difference of opinion. When I pointed out that Railtown's dividend wouldn't get out at least until August, September, that's just a difference of opinion. When I pointed out, I mean Finger Motion. When I pointed out that Finger Motion's contract, it would have been better if it would have been a better signal if the company had raised $20 million, $30 million via Roth Capital when the stock was $3.50, $4. Then they just raised a little bit of money at a discount from their current investors. It wasn't a particularly good sign to me for revenue this year. It's a slow walk instead of a rapid ramp up. It's just a difference of opinion. It's just a difference of opinion. It's not a fight. But as far as I know, there was no fight. So I don't know how I'd react now, but maybe I'm not Donald Trump, you know. Giuseppe, how are you? Ernest Green, I can't remember. I want to sell, yeah. Yeah, I knew you were one of the shorts, but you can have your time here. I want to sell it now. Well, go ahead. Why do you have to tell us? You don't need to tell us. You want my permission. If you want to make a bad financial decision, go ahead and sell it. There, you got my permission. You have Tony Cowboy Clown talking about it when he worked so hard to knock it down. Now he finally bought in. Well, Tony needs to buy in so that, I don't know what Tony does, but he's got to try to look smart. And these guys need to have you as their audience so they can go to CEOs and get IR contracts. You know, maybe that's something I'm going to have to do in the future, but I don't, at this point, I have zero interest in pumping a stock and then dumping it like the classic stock pools of 100 years ago. It's just not, I wouldn't be proud of myself doing that. I find it very greedy. I find it very self-centered. I find it selfish. And I find it destructive to other people's serenity. I don't like it. But Ernest, you're a short seller as far as I know. You have my permission to sell it. Let me look on my list. I don't think you're even on my list owning any stock. So go ahead and sell stock you don't own. It won't matter. In 5 days, what you say or think isn't going to matter. Giuseppe, I want you loose, giddy on the. I'm not a dancer, unless I'm drinking, and I don't drink anymore. I've never been get the blood work and yeah. Now I'll just watch. If you want to learn how to dance, just watch your mama and me. A good old boy and his lady, nothing too fancy to see. Lower overall inflammation. Yeah. Drink lots of water with added electrolytes. Eat leafy greens. And extra virgin olive oil. Wow, Giuseppe's been adding. In grano. Good for you. Let's get a quick price. The bid is 43.5. The ask is 43.7. The volume is 342,000. Mostly fake, mostly spoofing, mostly collusion, mostly crossing. Why the hell, as a policy decision, why the heck do we need an over-the-counter market like this? So goofball Cromwell can have a goofy smile on his website? Oh, I meant I will not sell now. All right. I'll write that down. I have a feeling you'll be one of the first sellers. And I just want to emphasize to people here, when Railtown goes to $1.50 or $2, there's going to be people out there that tell you that's a win for retail. You got to come over and buy the new improved version of G-Bucks. I just highly recommend. It's time to get away from that anxiety, that urgency, that guaranteed way of losing money, because you don't know which one's going to work. We just have, that's an addiction. That's an addiction. And so Ernest will probably sell his and let us know when he does, to get your money hot, because your money needs to be hot. They need your money constantly in motion so they can steal it and then blame it on you. Hey, Babcock family, good for you. Good for you. I'll make sure I have that number down. I think I do. It looks familiar. All right, let me see if I can show you anything that I came up with. Let's just go over this quickly. Let me take the comment down. These are some of the multiples of recent deals. The deals weren't that big. It's just whatever, that was how it was priced. Look at this one at the top, 500 million. Now, I don't know that Railtown will get to 500 million in a few months, but in a couple of years, 3 years, it could be at that level. But then those multiples might have changed by then. So it's probably not a relevant deal to look at. But look at that valuation, $75 billion, 150x. Look at this decagon, 10 million in revenue. Well, I think Railtown will do 10 million in revenue in its sleep. It's valued at 1.5 billion. 1.5 billion valuation for Railtown. If we assume 200 million shares outstanding, it's $7.50. That's at 10 million revenue with 150x. Railtown would be 750. But I think Railtown is going to blow 10 million in revenue away. You're going to say when? Well, we're going to find out. Look at Chain Guard, 40 million in revenue. That number, I think Railtown can do, I don't know, by the end of the year. And what I'm talking about isn't past revenue. It's locking up contracts so you can look forward and say, 2026, they're going to do 40 million. But look at it, 88 times. That's $3.5 billion at 88 times. And that's just 40 million in revenue. If we use 200 million shares, is $17.50 a share. Look at this one, Glean, 100 million. That would be my target. If you needed to use one in your head for what Railtown will leave this year as its projected annual recurring revenues, I would use 100 million. I think that's going to be the minimum they do, but I think that also they will achieve that all day long, 100 million. Well, at 72x multiple, that's 7.2 billion in market cap. That's $36 a share. And the key thing here is what I'm trying to get across to you, because this market is inhabited by big money, knowledgeable money, cash in motion, retirement plans, ETFs, money managers, mutual funds, family offices, research analysts, there is going to be price discovery. And because this market is hot, which is a term you should be careful of hearing in investing, but there's no denying that AI 2.0 has caused a lot of interest. Well, they're going to discount if the projection is that Railtown will do 100 million in 2026, they'll discount that number to the present. Well, if they do that and they get a multiple like Glean, you're looking at $36 a share by the end of the year. How about Harvey? 75 million in revenue. All right, let's look at that. 75 million in revenue at 67 times. That's $5 billion. What is Railtown worth? at 5 billion using 200 million shares, it's $25 a share by the end of the year, I would argue. Here's 100 million, but at only 60 times revenue. All right. What does 6 billion do? Well, you know the answer. I'll put it in anyway, but you know the answer at 200 million shares. 30 bucks. Here's Cohere at 5.5 at 100 million. This one here I can barely read. 117 million gives 5.3 billion. This one down here is 100 million. Oh no, sorry, it's 1,000. It's a billion a year. Sorry, it's a billion a year. And there's 700 million. Could Railtown ever get to 700 million revenue? Sure. But it's probably 2, 3, 4 years down the road. And then the question is, would the multiple still be high? Well, look at Ramp. The multiple is only 23x. So it's an art, not a science. And the biggest reason the multiple goes down or is high is what stage of growth is it? If you're doing 100 million in revenue and the market feels like you can get to a billion or 2 billion in revenue, they're going to pay a higher multiple. If you're already doing a billion in revenue and they think you can grow to 3 billion, they might not give you as high as a multiple. It's just arithmetic. All right, let me see what else I wanted to show you. Oh, I wanted to show you this. Yeah, okay. My head, speaking of my head pounding. My head is pounding. Okay. I can't tell which one's the one to show you first. I guess that's it. This comes from Quorum Group. The surging AI M&A market. The mergers, and this is June 18, 2025. June 2025. The mergers and acquisition market for artificial intelligence companies has surged over the last few years, almost tripling from 430 M&A deals in 2020 to 1,277 M&A deals last year. That growth is continuing in 2025, as indicated by the 381 M&A deals transacted in the first quarter of this year, a rise of 21% year over year. Total M&A deal value for AI providers has also trended upward, spurred by mega deals of over 1 billion. For example, the disclosed M&A deal value in the AI sector in Q1 of this year was $21.6 billion, mostly mega deals. Although it should be noted that the total deal value is actually higher because only 15% of the transactions in the first quarter disclosed the deal value, as buyers preferred to keep their strategies private. Interest in doing M&A deals in the AI market is widespread, spanning both financial and strategic acquirers, with private equity firms involved in more than 20% of the transactions. Looking across all 29 market sectors that we track, AI was the one consistent M&A driver for all of 2024. What is driving this growth? The surge in M&A deals for AI companies is primarily driven by the potential value of AI across a spectrum of industries. Companies see AI as a way to improve decision making, making it more like white straight males. Oh, sorry, I shouldn't have said that. That was an attempt at humor. Companies see AI as a way to improve decision making, drive innovation and creativity, and improve customer experiences, all of which can provide the companies with a competitive edge without hiring white men. Just kidding. Just kidding. Just kidding. Don't get mad. Don't get mad. And it's the need to have a competitive edge, or even simply to stay competitive, that underlies a lot of the increased demand for AI capabilities. This demand is being satisfied in many cases through M&A deals in the AI space. Quorum's Senior Vice President, Dr. Ivan Ruzic, notes that businesses and governments have bought into the fact that AI is the future. He says, quote, AI is going to drive developments into probably the next half century or further, unquote. And just like oil, which was the fundamental resource during the Industrial Revolution, there was coal and wood and children. The oil that is is fundamental to the profusion of AI will be the infrastructure provided by data centers and hyperscalers who enable the use of AI in a way that industry wants it to be available. Anyway, that's AI 2.0. It's here. Fear is also driving the AI deals. Quote, there is so much interest in AI, Ruzic says, because everyone is scared of falling behind and missing the train. And so they're all looking for AI-enabled technology that will give them an edge that they can turn into something sustainable, unquote. Yet another factor driving these deals is the rapid evolution of the technology, which can quickly make a company's AI-related solutions irrelevant or old, useless, or with less use. Consider the early solution space around ChatGPT as an example. Ruzick recalls, quote, when ChatGPT first came out, there were a lot of third-party vendors that jumped into or on the bandwagon because they knew that it couldn't access the internet. So someone wrote an app, and I can't read the rest of that. So somebody wrote an app that allowed ChatGPT to do that. But as the models continued to evolve and they became multimodal, those apps became redundant. The rapid improvements in the technology made these applications unnecessary, unquote. Ruzick adds, if you're one of those vendors and you see the writing on the wall, you want to monetize what you have built as quickly as possible. And I think that's a driving factor here in technology before it becomes irrelevant. I don't think conductor is going to come irrelevant quickly, by the way. But this is the drive. This is built into technology, guys and girls' bloodstreams. We've got to move forward. That's why I don't think the attorneys are going to be able to hold up the train much longer. It's going to be time to get on board. So that's going to drive a lot of M&A activity. Ruzick also notes that many entrepreneurs in the AI space are looking for a partner, a private equity firm or a portfolio company, for example, with a strong balance sheet that can accelerate their growth and sustain or accelerate momentum they've already built. These situations are also driving M&A deals. That's happening in the oil and gas space in spades and gold and et cetera. These application areas, three application areas that are seeing a particularly high volume of AI-related M&A deals are healthcare, customer service, and marketing. In healthcare, I wish they had attorneys up here. M&A deals are being made to enhance various aspects of healthcare, such as diagnosis and treatment, personalized care, as well as operational efficiency. For example, AI is being used to analyze medical images such as X-rays and scans with high accuracy, potentially detecting diseases earlier and more precisely. A recent M&A deal related to AI used in healthcare is a French radiology company, Glenmere's acquisition of Caris Medical, a company that utilizes AI to improve lumbar spine MRI interpretation, offering precision in detecting disc herniation, stenosis, and other findings. The acquisition allows Glenmere the ability to offer a comprehensive suite of AI solutions for various imaging modalities. From chatbots and virtual assistants, which handle customer questions and provide instant responses, to predictive analytics that can help businesses anticipate needs, AI is transforming customer service, which is the second area, customer service, improving customer experiences and helping businesses to better service their customers. And AI customer support is evolving from providing assistance to acting as a more full-fledged agent that can provide a wider range of capabilities. For example, Walmart recently introduced Gen AI-powered shopping agent called Sparky in its customer app. The agent goes beyond answering questions. It can act like an advisor, such that if a customer is planning a cookout, Sparky says, "Don't invite your mistress." Some large M&A deals have been made recently in light of this trend toward agentic AI. And remember, Conductor helps companies create agentic AI. For example, in a $2.85 billion mega deal, cloud-based platform provider ServiceNow recently acquired AI company MoveWorks. By combining ServiceNow's capability with MoveWorks, agentic AI orchestration platform, what's another word for orchestration? Conductor. The aim is to create a powerful AI agent that can increase productivity and improve customer service. Why not just go to the one that's ready? Conductor. But maybe Conductor can help them do this too. The final area of the three is marketing. AI is being used in every aspect of marketing, from crafting personalized email campaigns and generating content to managing social media and optimizing ad campaigns. Gen AI can automate various aspects of content creation, including generating blog posts, social media captions, and emails. AI can also help identify trending topics, optimize content for search engines, and personalize content for audience segments by using the same AI voice so that every segment sounds the same and mispronounces every word so the audience quickly stops listening. No, that's me. As soon as I hear those disembodied voices, I can't stand it. An example of recent M&A deal, a recent M&A deal in this space was the purchase of One-Click Technologies, a Gen AI and customer experience solution provider, by DataLens, a Singapore-based data engineering and AI solutions company. The acquisition will enable DataLens to enhance the operational efficiency of its clients by streamlining customer service workflows and supporting the delivery of personalized messages using Gen AI and automation. Other application areas, healthcare, customer services, and marketing are but three application areas seeing AI-related M&A deals. AI is having an impact on a broad range of sectors such as cybersecurity, telecommunications, manufacturing, and media and entertainment. M&A deals are being transacted in all of those areas in the AI space. As AI becomes more sophisticated, it will continue to drive acquisitions of AI companies in the future, probably even cause an increased pace of these types of deals, particularly among the biggest tech players. Major tech companies such as Google, Amazon, Microsoft, and NVIDIA have made significant investments in AI to fuel their future growth. Isn't it interesting? Out of those four companies, two of them are partners with Railtown. Microsoft is an announced partner over the last 2 years of Railtown, and NVIDIA, I think, for 1 year. In addition, acquiring AI companies and AI talent is critical for businesses to continue to innovate, scale, and sustain a competitive edge. Remember, the number given, I believe, by Corey in his presentation of a year ago, but it also comes from a third-party source. And there was a third-party article that I showed it to you, gave the same or similar number, $300 billion is going to be spent on AI computer software development by companies worldwide to maintain their competitive edge. Ruzick sees this as a way, quote, everybody, including governments, jumped onto the AI bandwagon, and AI took off because they recognized that this is strategically important. But AI adoption is also driven by its benefits. It's faster, cheaper, safer, and better. Actually, it doesn't even have to be better. It just has to be the same or close enough. As long as it's safer, cheaper, and faster, people will adopt it, unquote. And when people adopt AI in dramatically increasing numbers, and companies see the need to acquire AI technologies and talent to stay competitive, can merger and acquisition deals be far behind? I don't think so. I don't think so at all. All right. Biggest investors in AI by capital investment, SoftBank Vision Fund. They've done 48 investments, and I guess it's $13 billion invested. Clarity AI, Eightfold AI, Contact Pod. Microsoft, 14 deals, 11 billion. I hope it's not 11 trillion, but I think it's 11 billion. ChatGPT, Builder AI, and Kudo. Tencent, 25 transactions, 6.3 billion. That doesn't sound like very much money. Is it trillion? Anyway, it's a big number, whatever it is. iCarbonX, Kindred, and Vauxhall Cloud. Tiger Global, 65 transactions. Scale, Sentinel-1, Abacus. GM Financial, Cruise, Insight Partners. And I'm sure there's more. Enterprise value to revenue multiples in funding rounds. Well, you see, Sierra went off at 225 times revenue. So you see the line in the green, blue-green, saying top 10%. Their average was 82x. And then the top 25%, the average was 57x. And I drew a yellow line through Cohere at 55x. They did 100 million in revenue. And then the next level, I guess, is the top, I can't read that, at the top, probably the top 50%, is 30x. And then it declines from there. But you see the multiples coming in for the very best companies at, above 30x, above 50x, above 90x even. Here's a series of questions. What are the AI valuations in 2025? In the fundraising rounds, not when they're public, but the fundraising rounds, or they're public, the raise is private, 25 to 30x on revenue. With top outcomes, higher. How are AI companies valued? Investors use enterprise value over revenue, enterprise over annual recurring revenue for growth. And then they adjust it for margins and retention and competition and how much capital is needed. What is the typical AI startup valuation by stage? Pre-seed, and by the way, that's what I think you're investing. You're at least buying this stock, Railtown, right now, pre-seed or seed money valuation, my opinion. And then, of course, they go to Series A, Series B, Series C. It's just defining it so you get confused. Why are fundraising multiples higher than M&A multiples in, sorry, I misread that. Why are fundraising multiples higher in AI? Rounds price future option value and market share. M&A prices they talk about control, integration risk, and full due diligence. Oh, I see. So they're saying, why are the multiples higher in the early rounds? All right, fair enough. What drives higher AI valuations today? Rapid growth, durable retention, high gross margins. I think Railtown's margins are extraordinary. Proprietary data, it is proprietary. Efficient distribution, they're going to have massive distribution. And lower inference costs. How do AI valuations compare to software as a solution valuations? AI median, the median raise, 25 to 30x enterprise value over revenue. The public SaaS trades are closer to 6x. So AI is the place to be. What sectors and models get the highest multiples? Infrastructure, cybersecurity, and data moat applications. How do I value pre-revenue AI startups? Pre-revenue. That's where we are. Use stage pre-money benchmarks and milestones. Adjusted for modeled performance, data access, and go-to-market proof. I would argue you have that with Railtown by AI partners wanting to be bought out. You also have the milestone that it is commercial, and you've got the evidence that 4 companies have signed revenue deals. But we don't have all that information right now. Who are the most active investors? Andreessen Horowitz, Sequoia, Tiger Global, Microsoft, Amazon, and Google. All right, it's 3:00. We'll get some scores around the league. Railtown, now the volume says 81,000. I can't explain it. It's 43.5 to 43.7, 71,840 on the bid. I tend to believe that's real numbers. Fingers up 16 cents at 177. Next strip is down a penny and a half at 3.96. G-Bucks is down 4 cents at 50 cents. Energy Vault is down 16 cents at 176. That's enough of going around the league. All right, here's another article by Siddharth Asthana. The AI valuation paradox. Are 200x revenue multiples sustainable? 200x or a bubble waiting to burst? Have you ever looked at the valuation of companies like OpenAI or Anthropic and thought, quote, wait, how on earth is anyone paying 40 or even 200 times annual revenue for an AI startup, unquote? If so, you're not alone, and you're asking the right question. As we move through 2025, the world of AI startups isn't just hot. It's thermonuclear. Cash is pouring in. Headlines feature billion-dollar rounds, and the valuation multiples are being stretched well beyond anything tradition-bound SaaS founders could have dreamed of. But what is really driving these wild numbers? Is this brilliance or bubble? And as a founder, builder, or investor, should you be skeptical, strategic, or all in? Let's dig into an honest look at the numbers. Well, number one, it's just his view. Honest probably has very little to do with it. And this is a broad overview, not one stock. But anyway, let's look at the drivers and what it all means for you, the AI ecosystem, and the future of value in deep tech. The artificial intelligence sector continues to dominate venture capital investment, with AI startups commanding valuation multiples that far exceed traditional software companies. From last year through this year, the median AI startup trades at 25 to 40% higher valuation than non-AI companies at the same stage. And in some cases, premiums exceed 200%. This raises a critical question. Are these valuations justified by fundamentals, or are we witnessing speculative excess? To answer this, we analyze the relationship between AI startup funding, revenue growth, and profitability. We examine key trends, case studies, and implications for investors and founders navigating this high-stakes landscape. Section 1. The AI funding boom. Key trends. Concentration of capital among market leaders. AI startups secured $19 billion in the third quarter of last year alone, accounting for 28% of global venture funding. Mega rounds dominate. OpenAI, Anthropic, Databricks, and xAI absorbed the majority of the capital. Winner takes most dynamics are emerging, where a handful of well-funded players control foundational AI infrastructure. I would just comment that I think my opinion of Railtown combined with AI partners, it is a winner. It will be a winner take all. But more than that, they have revenue or will have it. They're not going to need capital. So they're going to be well funded. I just point that out. Then stratified valuation multiples across stages. AI startups receive higher valuations at every funding stage compared to non-AI counterparts. You start with the seed funding stage, which I would argue you are receiving prices right now to buy Railtown essentially at the seed funding round stage. And they give some numbers that aren't particularly relevant to what we're talking about. They receive higher values at every funding stage. So seed, Series A, Series B, Series C, Series 7. Again, it's just different rounds of funding. They name them something to confuse you. It's also a priority of claims. And probably Series A has claims on assets that even seed does not, but it depends on how it's all written. Series D outliers reflect extreme investor confidence in scaling of the business. Railtown scales. Railtown scales. AI startups have a higher valuation than AI non-startups. I don't know how that chart helps you see that, but hey, it's probably drawn by AI. The widening gap between revenue and valuation. A small group of AI startups trade at 30x to 250 times revenue. A small group. I think we'll find out, but I think Railtown will fit in that small group. But anyway, 30x to 250x. Can you imagine? Far exceeding norms in the software space. OpenAI was 32x, Anthropic 44x, Perplexity 180x, Sierra 225x. This suggests that investors are pricing in exponential future growth rather than current financial performance. And I've shown you that over and over again, that small companies can have this exponential growth, but then the buyers do their calculations up where the growth is more arithmetic. It's more arithmetic than not, because they're happy with 15%, 20%, 12%. Section 2, the AI profitability challenge. Rapid revenue growth, but at what cost? AI startups achieve revenue milestones more quickly than other software companies. For example, they hit the milestone of $1 million in revenue in under a year. They hit the milestone of 30 million in revenue in under 2 years. The competition takes 3 years. The infrastructure costs are staggering. And the thing about Canada is providing funding for compute, as it's annoyingly called, for data centers, for power. So it's being subsidized. Which is good. It's good. That's good news. Is it sustainable? AI companies will achieve software-like margins, 70% plus. I think the margins at Railtown will come in at 70% and higher. It's huge in the long run. Demand for AI services will grow exponentially until it gets to 8 billion people. But if either of those assumptions fail, the lofty multiples could collapse. And that's what we've got to, that's the dance. Will the multiples correct? And right now, I think we've got at least 18 months, but we got to be ever vigilant. So you want to be focusing on proprietary architectures, that's Railtown, true algorithmic innovation rather than incremental. I think that applies to Railtown. But we'll find out more as they give information. You want to focus on a path to positive unit economics. That's definitely there with Railtown. You want capital efficiency. It's definitely there with Railtown. You want winner take all rather than segmented businesses. And I personally think that's what there with the conductor platform. You want defensibility against hyperscalers. That's Google and Microsoft. Is it a problem that the tech giants such as Google and Microsoft would do on their own, develop on their own? I think it's pretty clear Microsoft is already a partner, but I think that Railtown, and this is an assumption, that Railtown is 5 to 6 years ahead of anybody getting this platform created. And I think it's pretty clear that Microsoft or Google would rather buy Railtown and leap to the head of the class in the conductor space than spend time developing it on their own. They're in a race. That's why they call it hyperscaling. And they'll spend anything, bear any cost, bear any burden to win. Revenue quality, we'll find out. I think it's going to be high quality. Recurring revenue streams, I believe that's definitely the case. Optimize efficiency, they state it in all of their press releases. And they have cloud strategies. I don't know how to translate that particularly bullet point. Focus on verticals, definitely. I don't think they're in direct competition, believe it or not, with anybody. I think they're on top. They help competitors compete with other competitors, so they're a tool that everybody uses. They have an optimistic case here. Base case and pessimistic case. Let's not go through all that. I think it's pretty obvious. And I don't want to waste your time. The base case pessimist and optimist basically boils down to, are the growth projections and earnings accurate and revenue accurate? And I think they are, at least now. But we'll tune into those risks later on. I think you've got many months ahead before we have to focus on that. There's the pessimistic case, downturn in risk, infrastructure is too expensive, and then that the multiples decline. And they compare it to the dot-com bust, the cloud computing bust, blockchain bust. Okay, we all know about bubbles. And it down here, I think this is important down here. AI's trajectory will likely follow similar patterns. Survivors will dominate while the rest fade. And we've talked about that before with the dot bombs and the rest and the cram downs. But I think Conductor will be one of the survivors. And more importantly, I think the whole kit caboodle will probably be bought out before that becomes a concern. All right, this is a New York Times article. I do not subscribe to the New York Times, but this is from 1934. If I subscribed to it, I could get it. But here's the headline. Somebody, I don't know, assails Kennedy's pool activities. Senate Stock Market Investigation Committee hits his, I guess Glass was the name of his firm, action. Kennedy profited by $395,000. This was the reason Pecora objected to his serving, but difficulty is smoothed over. Anyway, the key thing is Kennedy participated in stock pools, which is all these guys are doing that come to you. This is just a bit out of a different article. In 1933, Kennedy orchestrated a pump and dump. Kennedy and some of his Wall Street associates pulled off another unscrupulous market manipulation. They spread rumors that an auto glass company had contracts to produce bottles. They spread rumors COSM had contracts as the Prohibition era came to a close. In reality, he and his friends had formed a stock pool to pump and dump shares based on the false news. He got away with it, of course, which probably explains why he began to escalate his behavior. This is exactly what's going on with these pump and dumpers. It's exactly. And if you want to be someone that dumps, let Ham go out or Frank or Daniel go out and pump. Just get in early and dump before others do. And then if it's one of the ones that soars, let it go. There'll be another chance. Did I already do this? Yes, I already did this. Oh, no, I didn't. What are the conclusions? The AI sector is at an inflection point. Valuations reflect optimism about transformative potential, but profitability remains elusive for most. And that's a reason for Railtown. Railtown has been out there 5 or 6 years. It's a proven technology. It's battle tested, and they are profitable. And then the network has revenue. So I think that question in this case is for the startups and the people just joining the parade. But we'll find out. Investors must differentiate between true innovators, which I think Railtown is, these two guys, and hype-driven. I don't think it's hype. I do not think it's hype. While founders must build capital efficient, they're definitely capital efficient. They brag about it as compared to their US counterparts. And is it defensible? Yes. They have patents, but it's also proprietary and it's for specific companies so that imitators can't get access to the agent across the broad internet. For venture capitals, they have to focus on startups with technical differentiation. That is here. I'll try to prove some of this later on. I'm just running through it quickly. The economics have been stress tested. The Railtown can scale. They have been through the battle already. prepare for consolidation. Railtown is going to be a market consolidator. They're going to roll up 160 companies. The founders must prioritize capital efficiency alongside growth. I think that's clear. They haven't raised a lot of money. They've been extraordinarily efficient with their capital. Clear path to profitability. You're going to find out about it, I think, very soon. But their margins, my understanding, are well over 60%. So there will be profits, and the growth, I think revenues are going to grow remarkably. Clear path, I just said that. Avoid over-reliance on the banksters. I think you're going to find that out immediately. They are not going to have to go to a bankster or a private buccaneer. They're going to have all the money they need and all the revenue that they need. During the coming 18 to 24 months, fundamentally strong AI businesses will be separated by those who are just buoyed by market hype. Participants who maintain disciplined approaches to valuation and to business building will be the best positioned to succeed in this dynamic environment. What do you think? It's just a opinion piece. Anyway, that's by Siddharth Asthana. So let's go back to your comments, unless I lost them all. I might have lost them all. Oh, Ernest Green. I misunderstood Ernest Green. I was trying to explain about Cowboy and Clown, how he talked bad about it. Now he decides to buy it. Gotcha. I misunderstood you. I apologize, Ernest Green. I misunderstood. Doug Peterson, good for you. 60K, that's great. Good for you. Doug, we've been now in a gold company collectively out of Nevada, which I invested in personally about either 2008 or 2009. I have personally, I think, invested $400,000, give or take a little bit. Probably higher than 400, mostly privately, some of it in the open market. It would take a lot of work to recreate it. So I've known the gold company for a long time. We collectively, with some other investors, put in about somewhere, but I don't know by memory, somewhere between $400,000 and $500,000 in the financing round, which you participated in. The company was seeking $5 million to build out its pilot plant. The use of proceeds were, one, to rebuild the pilot plant from it because of an earthquake that had happened, to order equipment and expand the pilot plant for daily production. I think the number that I remember was 26 tons I think simply 26 tons a day of material, 26 tons. I'd have to look at the numbers, but at the anticipated gold recovery, the pilot plant is expected to produce I did the arithmetic wrong. Not a lot. 5 to 10 ounces of gold a day. But the goal is to produce, which if you use 5 times 3,500, it's 18 grand times 30. It's $500,000 a month. I mean, it's not small. But the point isn't that that's meant to create huge revenue. It's meant to prove that the process works and you can weigh the gold, as the guy calls it. So we raised that money, and I sourced an investor for $5 million, which is very exciting, both for the company and for that investor. I believe, just to go over it, to go to a extreme, not necessarily the largest extreme, but I think that the resource that exists is 1 billion tons of resource. And it could be much higher than that, by the way. But I think it's 1 billion tons of resource. And as the process improves, they always do, you could be looking at 250 million ounces of gold recoverable. 250 million ounces of gold recoverable. I am admittedly going to the rosy scenario, but that's more gold that can be recovered in any of our lifetimes. Even if one of the biggest companies buys the project, buys us, it will continue for a lifetime or longer. It'll continue for 100 years. So this is a massive upside project with gigantic potential. The funding has not come through yet. I have not gone, and of course I always think about it. I never even thought to go find funding elsewhere. Why? Well, I'm loyal to, I dance with who brung me. Well, there were dances I didn't do that, I have to admit. But when it comes to this, it's a commitment. Everybody honored it, and the delays are out of the control of the investor. There just simply are. And I'm not going to explain it beyond I'm not going to explain it too much, but it's bureaucratic holdups. And I have opinions about promoting people in bureaucracies simply based on whether or not they're not a white straight male. Sometimes gets people promoted more quickly than their experience and their education and their skills perhaps should allow. Anyway, it's an experiment. It changes the outlook, and it might slow things down. I don't know. That's one possible slowdown. Another might be more intricate reasons that that's too specific for me to talk about. But I do think the funding will come soon. Very soon. But I'm tired of making those projections. I don't see any reason for it to be held up. But as soon as I say that, there'll be another reason. So that 5 million has not come in. In the meantime, another investor put up $1 million on the same terms, and the company did move forward with the $1.5 million, let's call it $1.5 million, did move forward on their agenda of cleaning up the damage from the earthquake, rehabbing the pilot plant, ordering equipment. There was a little bit of cash that had to go to the people doing it, salary and paying back, I guess, some of their advances. I don't know. But there still is money in the company such that the company is fully funded on a bare bones basis for at least this year and next, if not another year, to hold all leases, to hold the body and heart of the company together. So whilst the progress has not been as rapid as it could have been if it had been fully funded, the company remains independent, remains ready to go. Now, what is a practical update? A practical update is two things. The testing has been completely finished. And the feedback I get repeatedly is the pilot scale process is all that is not left to do between either raising money to produce gold on our own, or, which is more likely, they just sell it to Barrick Gold or Newmont Gold or some consortium of gold companies. All that's left is to produce at the pilot plant. All that's left is $5 million. So I personally think that the source of funds that I guess I brought to the table, but they haven't sat down yet, so to speak. I think that'll come very quickly. But it's like Railtown. I'm tired of making any projections. It's just, I don't know how bureaucracies work. I don't know how leadership in a bureaucracy makes their decisions, particularly, I'm admitting it, when the head of the bureaucracy is female. I have no idea how they make their decisions. It's just not something that I experienced. When they're young female, I don't know what the decision making. What's the urgent button? What's the, hey, we better get it done button? I don't know. I know one thing, putting pressure on them is going to get the exact opposite response. So I think on the financing side, we have to admit that the company could be exposed to one of the risks I highlighted, which is if the group of core investors, all in their 80s, out of LA mostly, receive an offer from the guy that tried to just take the company at 20 cents a share. He's since increased his offered of 40 cents a share. If they vote on that, I mean, we'll make, at 40 cents, I guess we'll make, and there's some risks still, there's no guarantee, but we'll make, I guess, 100 times our money. Or no, is that 10 times? 4 cents to 40 cents, 10 times our money. And because of the warrants that are out there, we'll make double that, so 20 times our money. But that's not very exciting to me. But I'd have to say that risk is extremely close to playing out, that the company will turn. It has to be voted on, but just out of impatience, they may just turn to it. So that's a real risk again, that we'll be looking at 20 times our money instead of just out of this world. And it's because of investor impatience, wanting to do something before they die, maybe not believing that my source of capital will ever come through. It's just human nature. And I'll fight it, of course. I fight it all the time. But I can't guarantee that I'll be able to keep that wolf away from the door. And I think I would give the odds of an alternative financing coming in and cramming us down. Right now, I would give it very high odds, 80%. But it would have to take time and have to have a vote. And I'll talk, I'll fight, but if that gains momentum, it's tough. It's tough for us. So that's one update. Secondly, if the funding comes in, let's just say the funding I arranged comes in soon, what time frame will it take for the gold company to achieve its pilot plant proof? I'd say 6 to 9 months. I'd say it could be by the end of this year, but let's say by the end of the first quarter. And to be safe, let's say by June of next year, we'd be able to have the pilot plant running, proving every single day that gold comes out in hand. And it would be one of the most exciting events in your investing life, in my investing life. So I'd say 9 months to a year. But the company might accept a very limiting financing. So we may not participate in that excitement. But if we do, what is that excitement? Well, obviously anything can happen. I don't think there's any fraud here, but anything can happen. They could discover that I see very little risk to scaling the process from the laboratory to the pilot plant level, because I asked about it. They've tested for it. Everything that I'm told, there's no risk, basically. But there is risk there. There's always that scaling up risk. With gold prices having gone from $400, under $400 since this process started, to almost $4,000, and with the cost per ounce being under $400, I think there's very little risk in discovering nightmare cost overruns. You're going to be making $3,500 an ounce profit if gold sells for $4,000, which is, I think, where it's headed, every ounce. So it's very exciting. It's very exciting. I think there's three scenarios that the company stands as its own operator and seeks project financing, which I can source. Others can too. And I think it becomes a question of what's the present value of 200 million ounces of gold being produced over the next decades, with, let's say, $3,000 in profit. I'm not saying 3,500. Or $600 billion. What's the present value of $600 billion produced, 600 billion, over the next 2 or 3, 4, 5 decades? Gold doesn't, you don't discount gold very much, ironically, but you would probably discount some variability in the resource, maybe. I don't know. But right now, the number of shares outstanding approximate 400 million shares. And I think if you extrapolate it, it's around 600 million and headed maybe to 800 million. But if we use 1 billion shares as our reference point, that's a target undiscounted of $600 a share. What discount factor do you put on it? I don't know. 90%? You come up with a $60 per share target. I think 90% is too severe. I would argue your target could be $400 a share. If the company produced the product themselves, but that could be over time. But in a public market with gold as a exciting place to be, I think the stock could go to $400 a share. Is that dreaming? Who knows? But I'm trying to give you the excitement. You paid 4 cents. If they sell out right now, I think the most we can make is 40 cents. But in this intelligent decision after intelligent decision, and everything falls the right way, and the company produces it themselves, I really think over time it could be a $400 stock price. Okay, what's another scenario? Another scenario is they have the pilot plant work and proving up the gold for 6 months, and they decide to sell the whole company to a combination of Barrick Gold and Newmont Mining, as an example. And you start with 200 million ounces, which maybe you want to start much less than that, but start with 200 million ounces. And at some point, the price for proven gold in the ground will be very high. But the argument will be, is all of this proven? Do we need to drill more holes? So there'll be debate back and forth. Those holes will get drilled during the next 6 months. That's part of the use of proceeds, next 9 months. And assuming that it proves it up the way is anticipated, and assuming that the debate can be that there's 200 million ounces recoverable, the question is, what would a consortium pay for those ounces in the ground, adjusting for time, adjusting for the risk that, yeah, the tests show 200 million ounces, but what if we get down there and we find out there's something wrong at depth, or as we get closer to the brackish water, or maybe there's some interference from clay. I don't know. But typically, what is paid for gold in the ground is $50 to as high as $400 an ounce. I don't think the company would sell for $50 an ounce, but I'm not sure that Newmont and Barrick would pay $400. So what's a number? I mean, it's all wild ass guesses. I would say $150 an ounce. And they'd probably have to pay in cash and shares. But at $150 an ounce, they would pay $30 billion for the company. And I think you can figure it out. If there's 1 billion shares outstanding, they'd pay $30 a share. I used in my projections $40 a share. And there's different ways of coming up with that. Maybe I was too restrictive on what they'd be willing to pay per ounce, or maybe the number of ounces should be 250 million. But anyway, there's a very good potential that a consortium of companies like Barrick and Newmont would come in. They're the natural buyers. They're 120 miles away by rail. They have the Gold Strike Carlin Trend discovery plant, which uses autoclaves, 6 giant submarine-sized autoclaves, to produce nano gold that is almost identical to this company's gold. It's a slightly different process. They're running out of visible resource, so this is an obvious place where it would be, where the company would sell their project, Barrick and Newmont. So I would say, to summarize it, that your targets, Doug, obviously we all have to assume we can lose our money. So it's, your targets are 0, 4 cents a share. I'm going to say $40. At $4, what would $4 be? $4 would be if the pilot plant doesn't work for some reason. I think Newmont and Barrick will come and buy the resource and use their brutalistic approach of autoclaves. And I think they could pay $4 a share for that. So I think your targets, you paid 4 cents, 40 cents because of the threat of these shareholders getting impatient and just selling out. But $4, if the pilot plant for some reason gets delayed, or people don't, and they don't get the results they wanted, and they just sell it as a resource that Barrick Gold, the Gold Strike group, can just process through the autoclave. I'm not going to go through it, but I calculate that at $4. $40 if the pilot plant works and they prove up the resource and they just decide to sell the company. I think $40 a share. If the company decides to produce it on their own, do project financing, I think your target could be, over time, $400 a share. And obviously a lot of variables there. The key thing is to get the darn thing financed. But it's a very exciting project. It could be the largest gold discovery, not only in North America, but maybe in the world. And it has the potential to change your financial position, my financial position overnight. It is a terribly exciting project, but we're waiting on a bureaucrat. I don't think the company may not give much more time for that. So as an investment idea, we may be limited to groupthink of a bunch of 85-year-old men, but we'll cross that bridge when it comes. To summarize, as soon as it's funded, I think we have a 9-month wait, and I think that the process is to the principals and people that are close to the company, the process is as proven as can be and is going to work. And it's going to be one of the most exciting. This is the kind of thing that'll be talked about for generations, like the Carlin trend. But we're not there yet. The most significant risk is we don't control our future. And a group of investors people make decisions against their own interest all the time. And they can vote that we do the buyout that caps us at 40 cents. So that's where we are. I'm still extremely excited about the project. And remember, Doug, you didn't pay 4 cents if you factor in the fact that you have a right to warrants at the same 4 cents, of course. So, yeah, you could look at it that you're paying 4 cents double, or another way to look at it is you're getting twice the number of shares. I don't know how you want to look at it, that 8 cents, but combined. But your return is going to be twice as big if we get going. Anyway, that's as much of an update as I can give at this point. I'm working on it, is all I can say. No, I bought it so I could hang on it this year. Good for you, Ernest. That's great. That's great. That is great, Ernest. And you bought 50,000. Bravo. That's going to be a good. That's a great strategy, and I commend you for it. Hey, Donna, how are you? Hey, Jack says hi to you, Donna. And Donna says hi back. Let's see how the market's going to close. Next trip is up 3.5 cents at 401. Finger is up 17.5 cents at 178.5. G-Bucks is up almost 4 cents at 58.9. Energy Vault is down 18.5 cents at $1.75 approximately. Railtown is almost up a penny at 45.5. And the volume is inexplicable because now it's 382. It just keeps changing massively. And I don't know what else is there to look at. Quantum is 12.75. Mountain is 11.89. It's down. Soundhound, that's a stock to follow. Soundhound is a market cap. I'm not telling you to buy it, but that's a market cap of $5.8 billion. And they don't make money as far as I know. But I think Railtown has the potential, let's say by January, to be producing similar revenue projections. This thing's $6 billion. ZJYL is 64.73. I don't know what else is here that you guys want to know. I don't know what this Northwest Bio 25 cents. They got it running up, and then they just crush it. What's T low hits a new low? 136. They have prostate cancer solution, and it gets destroyed, and nobody cares. It's unbelievable. It's unbelievable. All right, let's look at Railtown. $45.5, 382. All right, let's listen to this Morgan Stanley minute.
Operational efficiency has become a top priority for the C-suite. And so when we frame this computing cycle around productivity, really the addressable market is that $40 trillion
40 trillion
market.
I was honestly shocked when we actually put all the pieces together to figure out the total capex on AI infrastructure. The number is a bit over $3 trillion over the next few years through 2028.
We've seen similarities in terms of euphoria, investment, falling costs, increased adoption. On one end, I think the differences, as you mentioned, the capex that is being spent this time is multiples. And just like electricity and internet is everywhere, AI is going to be everywhere.
Investors generally have seen that as an opportunity to get into the growth opportunity and the value creation opportunity that these companies can provide for earlier, at an earlier stage.
We're a tiny fraction of the way through a massive investment cycle.
That's Morgan Stanley. We're a fraction of the way through a massive investment cycle. And the addressable market, the first guy said, it's not annualized, it's over time, $40 trillion.
Operational efficiency has become a top priority for the C-suite. And so when we frame this computing cycle around productivity, really the addressable market is that $40 trillion global labor market.
I was honestly shocked when we actually put all the pieces together to figure out the total capex on AI infrastructure. The number is a bit over $3 trillion over the next few years through 2028.
We've seen similarities in terms of euphoria, investment, falling costs, increased adoption. On one end, I think the differences, as you mentioned, the capex that is being spent this time is multiples. And just like electricity and internet is everywhere, AI is going to be everywhere.
Investors generally have seen that as an opportunity to get into the growth opportunity and the value creation opportunity that these companies can provide for earlier, at an earlier stage.
We're a tiny fraction of the way through a massive investment cycle.
All right, it's 4 o'clock. Railtown is 43.5 to 44.59, 71,840 by 14,000. 43.5, 71. There, it just closed at 45.5, up almost a penny. The volume, it says now 382,000. And the last trade was 100 shares at 45.5. So $46 priced the entire complex. All right, 4 o'clock. Let's see if there's any news of interest. So they revised jobs added under Biden lower by 911,000. But you know, when you deal with Trump, you can't believe anything he says. You can believe Biden. Goldman makes the case for commodities. I told you guys this is coming, but I know it's frustrating. Unbelievable. Israel attacks Qatar, and I know they've been arguing for thousands of years. We shouldn't talk about it, but guess what? Hamas is now accusing the United States and Trump of doing it. So whether or not you care about it, it's coming to our doorstep. Big oil is making job cuts. Cantor Fitzgerald is debuting a Bitcoin fund with gold insurance. There's a lot of talk, some talk, I should say, about a market correction. Is China technology breaking out? The NVIDIA CFO is bullish at the Goldman Technology Conference. They heard commentary from NVIDIA, AMD, IBM, Microchip, Teradyne, Seagate Technology, and Global Foundries. The most notable presentation came from NVIDIA CFO Colette Kress, who took a bullish tone. She expects $3 trillion in AI infrastructure spending by 2030. We just heard Goldman Sachs say $3 trillion Morgan Stanley say $3 trillion by 2028. So Kress expects $3 trillion in AI infrastructure spending by 2030, driven by hyperscalers, the big guys, sovereign buyers, and AI labs. She said data center compute revenue rose in China, excluding China, and is set to climb in third quarter because of demand for Blackwell chips. Then Goldman Sachs analyst said digital semis and AI companies highlighted a healthy and expanding AI market fueled by robust CapEx spending. Specific to NVIDIA, NVIDIA sees capital spending on AI in excess of $3 trillion by 2030. AMD, Mr. Norrod highlighted strong interest for something they have. And two, that something, another similar product is going to drive revenue. All right. All right, great. IBM is uniquely positioned. I think I have to pay more to get a deeper understanding. Yeah, I can't get a deeper understanding than that. But let's just, before we sign off, let's say out of 3 trillion in spending, Railtown is able to get $3 trillion. What number do you want to use? Railtown gets 0.5% of that spending times 0.05. That would be $150 billion. Oh, that's 5%. I meant to say 0.005. So let's just take 1/10 of that. That'd be 15 billion. Railtown could get 15 billion in revenue over the next 3 to 5 years if they got 0.5% of the NVIDIA projected $3 trillion spend. Whew. Divide that by 5 years. That's 3 billion a year. Guys, it's just gigantic numbers. It's almost silly to do the calculations. It's almost silly. All right, so Railtown closed at 45.5 cents on 382,000 shares. I thank you for joining in, and I wish everybody peace. I wish the Middle East could. I really wish that Trump could stop listening to Benjamin Netanyahu. But we are where we are, and why should we think about it? Anyway, peace to each of you, and we'll talk again tomorrow. Cheers.